Hello, folks. Welcome to Market Trends. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone today. Today is Thursday, August 7th, 2025, and we have the market nice early pop and then kind of drifting. We're holding some important levels that we're going to discuss in a second. I'm going to show you some standardized returns, some ETFs we may talk about. And also remember that TradeStation is preparing to launch Titan X, the next generation of our trading platform. It isn't just a new model of our award-winning software, but a fresh trading paradigm that puts you in the cockpit like never before. Titan X will be available to customers as a beta soon. If you're new to TradeStation, you can join the waitlist at tradestation.com/Titan-X or see the link in the description of this video. We're also going to share some other links, just some disclosures and other things you might find interesting. And here we go. All right. So, as usual, you might want to go to tradestation.com. And then if you scroll down to our homepage, you'll see down here the article is more weakness coming in the US dollar. This is our rundown for today's webinar, today's presentation. So, if you want to check this out, some of the information we're going to be talking about is covered here. So, overall, I think it's interesting. I'm going to jump over really quickly now to the S&P 500. We've been talking about a few different things. We do our state of the market webinar on Mondays, and we talked about a certain level for the S&P 500 that was the 50% retracement line that was, if you want to be bearish, you wanted to see it hold, and it's not holding. So it gives more of a sense. So this is the hourly chart of the S&P. And what's interesting here is this is the whole move between the 31st and down to August 1st. So we had this big high that fails, goes slamming down. This is our last webinar where we talked about the bearish outside day. It was on a Friday. We slammed down. What's interesting is a bearish Friday with no follow through on Monday. That was one interesting thing. And then what's interesting after that is we basically had this, we had to basically stay under 63.20 if you wanted to use 50% retracement sort of confirmation for a move. And we did not. We basically got back above it that very day on the 4th. I'm sorry, on the following day on the 4th. And now we're basically rallied above it. And now look what level we're magically trying to hold, roughly 63.20. So essentially, we are now trying to build support at the level that should have been resistance if you were looking for continuation to the downside. So I think that's one thing that's important. That is interesting here. Now, I do think also if you look overall, the overall S&P, I think we can see here on this daily chart that, we essentially have this area now between basically the 31st and the 1st. This could very well become a kind of big space that we kind of drift between. We could basically be stuck here between kind of 64, 27 down to kind of 6,200. And we remember we talked about 6,200 back here. 6,201 was the weekly low back on the 7th of July and again on the 16th. And basically this range. So we could be forming here a range above the old, support. So again, there's a period of time when, there's less overall kind of activity in the market. We're going to have fewer catalysts. There will still be some that I'm going to get to. But this could be simply here, a pattern that becomes, a range where it could become a risk of a deeper pullback. I'm not saying that will happen. I'm just saying that this could be the beginning of a stalling topping pattern. And I will point out that the big item in some ways could be next week, the consumer price index on Tuesday. That is in some ways, I think, a potentially big item, because if it's hot, then it could undermine the whole idea of the Fed cutting rates, which is one of the big things that we're hanging our hat on now. So let me go over now to some of those other points we want to get to. Now, the main thing here is today's, main focus is whether the dollar is and whether we're going to see more weakness in the U.S. dollar. And I think this is an important thing overall because there's so many things that flow from a weak or strong dollar trade, especially things like metals and global stocks and things like that. So, the U.S. dollar index potentially peaked under 100. Now, if you actually look, we have a trading view idea. Where'd it go? I had my trading view idea. Oh, right here. See our trading view idea here in the U.S. dollar index. So basically, we did this one yesterday, and I think it's pretty interesting because, if you actually look at this level, there was a level that was the monthly close of May that we've basically stalled at. It was a monthly close and a weekly close, and look at how we closed that. It was at 99.44 in the U.S. dollar index. So this is the weekly chart showing that same level roughly. And I think what's interesting here, if we look on a really long term, do like 2 week candles really quick on TradingView, you can see here that we actually have made a series of lower highs. It's interesting that we made this lower high versus 2020 versus 2001. And if you look long term here, all the way back to the early 80s. So in some ways, like, as we look at this now, you can see that now we make another lower high on the really long-term chart. And then if we look down below, we can see that 89 is a level from, late 2020. So at this point in time, we've come down. We've tried to hold this level. This is a monthly chart. Go back to the weekly. But I think if we see this now, people might very well see, what, we've spent some time here. This was the first half of the year. We had this big sell-off. And now basically, we are trying to hold, but just kind of consolidating. And people might be looking here for some continuation lower. And in my view, this might be the dominant trade to really think about over the balance of the year. And I wanted to really emphasize this because this is kind of the big picture. It kind of tells you what kind of world you're in, because if we're in a dollar weakening world, there's a lot of ways people can look to capitalize on that. So let me now, let's see some of the other things I wanted to mention really quickly. If we look overall, we've done a complete 180 in terms of the news sentiment versus what we had last week. Last week, we were talking about the idea of gold potentially peaking, and obviously that has not happened. We've seen kind of the opposite happen. In some ways, we actually see some of the strangest economic statistical things in, I don't know, I would say all time, but in a long time. Seeing this kind of these revisions and other things like this create a whole new kind of ball game on the data. And so now we're in a spot where we look overall that we are seeing more of a weak economic environment. So I think, for example, one of the things that stands out is that today the initial jobless claims were higher than expected. The continuing jobless claims are the highest since 2021. Those are also consistent with the weak labor market. The other thing that's interesting is if you look at oil, oil here, this is on TradingView, but oil here continues to struggle. We've talked about this overall weakness in oil. And so I think that also is something which low oil prices could very well help kind of make things easier for the Fed to be cutting rates. So look here over on the Fed watch from CME. And we look at to like December. I'm going to try and zoom in on this a little, but what we've really seen is we have seen the problem. It's hard to really see it, but we've basically gone from for the December meeting here. I'm sorry, this is not. There we go. The December meeting, we basically are now looking at a 48% chance of us of a 50 basis point cut, pretty much. No, actually 75 base. Wow, this is bigger than I even noticed before. So basically, they're looking here for a cut of potentially 75 basis cuts by December. Now, if you look a week ago, the majority was at one rate, was it 25 basis points. So basically, we've gained 2 rate cuts in the last week. Now, of course, these numbers are very much estimates and everything like that. We now see in the September meeting a much higher probability. A week ago we were at basically 38% chance of a cut. Now we're at 91% of a cut. Now again, these are probabilities based on Fed fund futures, but it does kind of show the shift. And this is also part of what we're talking about in terms of the dollar weakening. This is very much consistent with that kind of the weakening dollar bias. Now, again, CPI on Tuesday could have a big influence on all these things. There are economists saying that we're going to start to see the impact of tariffs in the July numbers, which come out next week. So I think that's what we have to see. This is something which is potentially a big deal. And I might even venture to say that this is possibly the most important inflation report in maybe a year or so. And I say that because in some ways, if you look at this market's moves, we have not made big moves on inflation for a while. We've made big moves on other sort of things, but inflation has not been a big catalyst for the most part for stock prices. But Tuesday could change that. So just realize there is a risk here that if we have some kind of hot reading, it could cause some kind of real issues where now we're talking about the Fed being more dovish and all these other things. At the same time, we get a hot reading that could really undermine a lot of the things we have. I'm not saying it's going to happen. I just want to identify that is, I think, the dominant risk we now have in front of us. Now, what is interesting also is we had yesterday and today 2 really pretty bad treasury bond auctions. And I think that's another issue. So here we look at the 10-year treasury yield. I'm just trying to identify the potential risks here because, look, we're holding 420 on the 10-year. Yesterday we had a bad Treasury auction an hour ago on the 30-year Treasury TYX. We also had a bad auction in terms of there wasn't a lot of demand. So here we are with the short end of the curve pricing in rate cuts and the long end of the curve, buyers are not necessarily showing up. This is something, I mean, just to be clear, I don't want to overstate this, but this is not a terrific, situation. We could see things go the other way if the inflation report next week is nice and low. Then this could change the long end of the curve. But there is some lack of validation or a lack of credibility to a certain extent that things are going to be great here. That the long end of the curve is telling us that there is some anxiety about inflation, and when we're at a spot where the Fed is in theory about to be cutting rates, we should be seeing more demand at the long end of the curve. So I think that's also another thing to kind of bear in mind. Now, global stocks are coming into favor. So if we go on our MT main workspace, now remember these workspaces we share with you guys. Let me hide myself so you can see it. These workspaces we share at the top of our blog. If you go here to this actual blog post at the top, downloads are available here. So if you go into the workspace, if you go into the downloads, you'll get a zip file. The zip file has ELD files. Those ELD files have different kinds of indicators. You load those into your TradeStation platform. And then after you've done that, you can open up the workspaces, which are also in the zip file. Those are called TSW files, TradeStation Workspace. And then you can open up MT Main. So these are standardized returns. So let's look over here at key ETFs. Look in the last week. What do we see? Gold miners are the top performer, then home builders, but then metals, and then Brazilian stocks, and then retailers have been bouncing. I'm not really sure why, but then you have EFA, global, Chinese stocks outperforming. So we're really seeing here, the kind of global stepping back up. Do I have emerging markets? I'm going to add EEM to this. Oops. EEM is the ETF for emerging markets. And we're also going to see here EEM is up there also with EFA. So EFA is an interesting one to look at. And I want to show this to you guys really quickly. EFA is not a heavily traded fund for retail investors, but it is in many ways one of the key benchmarks, one of the key products for institutional investors. So if we look at a monthly chart these are for institutional investors looking for global exposure. It's like Europe, Japan, and then a little bit of other stuff, but it's your classic global stocks. So look at where we are versus 2007 here. And I think it's really important to kind of realize here is that, this is flirting with a potential breakout to new all-time highs. And I think this needs to be kind of understood because if we're looking at another potential phase of weakness for the dollar, if we're looking at the Fed cutting rates, if we're looking at things like that, this is something that people might look to extend. Now, this has lagged the S&P pretty much for the last 10 to 15 years. This has been, look at this. This is back where it was. Man, can you believe it's 18 years ago? I mean, I'm sorry, but I remember when this was the case, when global stocks were the greatest thing since sliced bread. The thing, though, is that at this point in time, we are back to those levels. And, we've been outperforming on a year-to-date basis. If you look over here, if you look on a year-to-date ranking over here on our key ETFs, you can actually see that EFA is up 18% this year, and the S&P is up 7%. So we have the relative strength. So I think it's important thing to realize this whole narrative of American exceptionalism and all that stuff that was kind of ending with this year, or however you want to view it. But just the key thing is that we had a period of significant outperformance by the S&P 500, much higher valuations in the S&P 500. And now we're kind of going the other way where the valuations are still high and people see value overseas. They also see the potential for the currency to move a certain direction. They see a simple kind of rebalancing. These things have been playing out. It was a strong driver in the first half, and it might resume and just remain a driver going into the second half. I think we have to kind of realize that. So that's EFA. Now, as we look at some of the different things that are happening, today there is an article. There are multiple articles in last week. Reuters essentially reporting that Taiwan had its biggest inflows since 2008. We saw another article saying, or the same article said that South Korea had its most inflows since beginning of last year. Investing.com separately reported significant inflows into Chinese stocks. We also saw recently that the Chinese trade data for July was stronger than expected. European retail sales are stronger than expected. And the European Central Bank has said they might not cut interest rates anymore at the very same time that the United States might cut interest rates more. So all those things would also put us in the direction of potential dollar kind of weakness and global outperformance. Mark Zandi, the chief economist at Moody's, said that we are kind of on the precipice as a recession, as he said it. And UBS also put out a note kind of with various strategies, kind of saying that people might want to think about essentially, selling the upside in the dollar, different kinds of bearish strategies on the US dollar. So there's a lot of news, there's a lot of technicals, there's a lot of relative strength, there's a lot of news, all kind of pointing in this direction, potentially toward more weakness in the dollar, which is why we chose that as a focus of the webinar. And I really want to say this has been a 180 from where we were, more or less a week ago. I think when we look overall, there have been some signs of weakness of data. All the data has been very confusing and conflicted for a while. And in many ways now, these revisions might actually confirm that some of the signs of weakness that we talked about actually were true. And those signs of weakness were the weakness in cyclical job growth and the weakness in ISM PMI numbers for manufacturing. Those numbers to me were always kind of potential red flags of what was happening. And so anyway, now we're starting to see it coming through. It's the S&P now is actually breaking 6320. I'm not sure if any news came out, but it is now leaning more in that direction that maybe there's more of a bearish slant here. We see we're breaking under this level. So I think it's important to kind of see here. This was no longer giving any real signal. We have the MTES workspace we share with you guys. This is for the futures. And on this one, the potential signal is when the 50-hour moving average is moving in one direction and stochastic goes the other way. So for example, the 50-hour moving average was rising and stochastic went to oversold, and that was a buy signal on the S&P, a potential buy signal on the S&P back here on the 5th. But now it's run its course, and if you look at it, it's still rising, but it's in my view, it's kind of much more feeble now, and it's this could have been a potential signal down here, but from my view, it's when you're range bound, you just kind of it's not as clear as it might have been. And I think that the bigger thing here is this is to me a little bit more potentially of an issue, but I still think that the people will be continuing to look at, I think, this big range. These 2 days could become a big range on the overall chart, like we had mentioned. So, all right. Now, going to jump over to our MT main again, this workspace, because I did want to mention some of the things that we have here in this article. We do mention a few kind of individual stocks and things that kind of jumped out. And I thought it was interesting overall that we do have a trading view idea on Tesla today. So, to me, Tesla is, let me hide myself. And basically, there we go. All right. So this was interesting to see this kind of very tight volatility on Tesla and to see this, this kind of squeezing triangle. And, this is something where, in some ways, if people get a close on Tesla, in many ways, let's actually look at it over here. I thought it was an interesting pattern overall. Look at how we now have an inside week. We're forming this tight inside week. And people might want to really be looking for a close above 330 to confirm a potential breakout on Tesla. And that's just a way to look at it, I think, here, because we basically have the weekly close up here on the week of the 14th of July, and that was right around 330, and now we're in this tight kind of range. It's interesting because that was the highest weekly close in some ways since all the way back here in May. So, I want to just point out that we're in this range. It has not confirmed, but we're in a spot here where we're going to start to see more robo-taxi news and everything on Tesla. And if you look at it, there are things about this with the rising kind of 200-day moving average. All of this kind of played out, but if you really look at Tesla on the long-term chart here, this is a weekly long-term chart of it. People might see this as still being essentially in a long-term sort of uptrend. And to a certain extent, I don't really like a cup and handle concept for something of this long of a period, but from a weekly perspective here, this is in a spot where if it escapes from this kind of range, this could be something where people look for this to go on what could potentially turn into a more extended run. So I think we have to realize is that we don't have the confirmation yet, but Tesla might actually give some opportunities here, and it should potentially be on our list. So that was one of the ones I wanted to talk about. Another one was Apple, which is now um, basically it had this kind of drop on earnings, and then it rallied when there was the news about manufacturing in the United States yesterday. Um, and essentially here with Apple, I'm just looking over the S&P. This is just kind of anyway. This is now potentially kind of breaking out of this range. We have a very kind of clear range on Apple here, and this range at this high around 214, and we're now above it. So from my perspective, this is something people might look for this to potentially extend back up. Potentially back up toward maybe this last big sell-off point in March around 235. So this is something that at this point, when you have these kind of sideways ranges and things get out of it, that's often something that can extend. Um, so I also want to point out, don't forget, we do have this concept, our volatility cycle. And in many ways, we're in a spot here where we are still essentially in this period of stock picking. Now, one might argue that we're now in the complacency phase. And I mean, I think we'll know that better as we get further along. But I think that right here, what we are seeing is we're in a spot here of more kind of stock picking and less correlation. And this is sort of environment where stocks like this can break out and then extend in certain directions. So I want to just kind of point that out. But the Apple sort of breakout was another one that was jumping out that is in our rundown that we wanted to talk about. Another thing that's interesting, I want to show you something of the American Eagle. Now we did not a trading video. We did basically an article here about. Let me actually did this article about. Let me show you from here. American Eagle. If you actually look at this, there was some interesting call buying, and American Eagle had a lot of attention this week with some of the political buzz happening around it, these ads and everything. And it's interesting, and you can, whatever you think about it, and even just from a fundamental perspective. I mean, the question, a company like this, who really knows about will an ad campaign actually get people to buy its products in a lasting way? I'm not sure. And it's something that will probably get some attention going forward. But what catches my attention, we did right here about the heavy options volume. But look over here now, excuse me, at this hourly chart of American Eagle. So look at this rally that we basically had. We wrote the article here. Now look how we came down and held a 50% retracement, went from that close the day before to the high. Now person on the 5th, which was back on Tuesday, might have actually said, I see this, and now look, it's holding this level. It was also this high right here. But it is just kind of interesting to see that we held the 50% retracement, and we held this, we held the high from back at late July, and we got that bounce. So I did think that was an interesting sort of thing. Now, another thing that's kind of interesting is if you look at Taiwan Semi today, it's getting some news from something involving Trump with tariffs on. He said that we're going to put tariffs on you unless you manufacture here. I mean, I guess that means if you manufacture some stuff here, I mean, Taiwan Semi will probably remain active in Taiwan. However, this was viewed as a positive for them. But despite whatever the actual news was, look at how it came down and hit the bottom of the Keltner channel. So remember, one of the things that we actually have, if you go over here on the workspace, we go to the price grid, we have a tool called Keltner pullback. And this, I've loaded the NASDAQ 100. So remember, you can kind of dig into this and look for stocks that are near the bottom of the Keltner channel. And you can just kind of click on them and see if they maybe have a positive longer term thing. Now, this is Adobe, which has been very weak. I was thinking of doing a bearish and kind of negative trading view idea on this one recently. Regardless, I mean, this is often something that people would combine with a bullish pattern where, for example, you'd be looking for things where, so this is how I would use it. There's the moving average order. And so I would almost, let's just change the moving average order. Let's go to change this. And I'm going to change it to say something like the, just something like the 10-day moving average and the 30-day moving average. That's, you can do different ones. So the key thing is that's going to give you a kind of, these are going to find stocks that are bullish in the intermediate, kind of short to intermediate term. So we look for all those stocks that have that condition where the 10-day simple is above the 30-day. Now we go down here and we right click on this company. We go to we go to data, and we insert a label row. All right, now what we do is we go back up. Now I haven't even looked at these yet, so hopefully it gives us something good. Go to Keltner pullback, and what you're actually going to find here is these are stocks now that are going to have pullbacks with a potential upswing. Now Amgen just had an earnings report, but even then, I mean, I don't know much about this actual company, but even if you look at this, I mean, there's obviously not a screamingly bullish chart, but you actually do have here a series of higher lows, higher highs, and some people might actually view this as the beginning of an attempted uptrend. But the key thing is that using the Keltner pullback in combination with the moving averages is some of the ways we can kind of look at this. So look at Datadog, for example. Datadog is now has the Keltner pullback. 0 means you're in the middle of the Keltner channel. Minus 100 means you're at the very bottom of the Keltner channel. Is this how to actually understand? I'm sorry. On this one, it's 50 is the middle, 0 is the bottom, and then if you're under 0, then you're actually you're under the Keltner channel. But here's also one where it shows us that we have an intermediate term kind of uptrend, and here it is at the bottom of the Keltner channel. So this is the sort of way that I think is kind of interesting to think about using this tool. It can often find things. Here's another one, for example, Amazon. You can see over here it kind of popped up. But I want to just kind of remind you guys that we have these are some of the things that we offer in this workspace. And here's a stock that this would have popped up a couple of days ago, and I was actually looking at Amazon, and I considered doing a trading view idea, and I didn't. And but the key thing is that this is one that it slammed down. It was under the Keltner channel, but it had the intermediate term strength. So the idea with this is to combine the moving average order indicator to find things with intermediate strength, and then use Keltner pullback to find things that are near the bottom of their rising range. That would be the approach. And in some ways, Taiwan Semi would have popped up on that yesterday, if you actually look at it, because it was near the bottom of the Keltner channel, and it had kind of short-term strength. So let me look for some of the other things. I'm kind of running out of time, but I did want to mention that. Some other names that popped up that were kind of interesting. I do want to mention CDE. I mean, we've talked about metals at different times. There was a time when metal stocks were heavily traded, but this company, CDE Core Mining, these guys had a really interesting earnings report back here in June, and they had another bullish earnings report here. So look at how this stock is held. There are some fundamental turnaround stories or fundamental improvement stories in the mining space. This is one of them. Another one is Newmont Mining. They had all kinds of troubles, and then they came back, some kind of operational stuff with their mines. And then the other one is Goldfields, GFI. Now, we did we did a blog post on this one a while back. People were selling puts in this name, and we wrote about it at the time. If you go and you look on, you go over here to our website and you look at like the Sydney Sweeney story, you'll actually see this thing here. If you click on options, this will show historical option stories we did. And I'm not going to find it here, but if you actually go, we did on GFI, I'm pretty sure it was right here in February, we did an article because somebody was writing puts underneath this, writing a put spread on GFI. And that can be a really interesting signal. It means people are wanting to be long. And what's interesting is look at how it's extended since that. So they were looking to sell puts underneath it, meaning they were neutral or bullish on the stock. GFI, Goldfields, these have had some really transformative sort of news happening. Another one is there's some others for the whole kind of AI, ongoing AI narrative is NBIS. I don't know much about it. It's an AI stock that had good earnings today. And then on the other hand, Fortinet. This name, I mean, has actually struggled for a while. FTNT, I want to just point out that they've had some real kind of issues, and this might be one that, see if it gets up maybe toward kind of 82, and then maybe does it become another Adobe or something. I want to just kind of point that out because when software names are good, but look at this on the weekly over here. I mean, maybe let's see if this thing gets to 82, and then maybe it turns into something for some opportunity to the downside. Want to just mention that. And now one other thing, Trump made some announcement today on cryptos. He was basically made some kind of announcement that could make it easier for cryptocurrencies to be in 401ks and stuff like that. So Bitcoin has been performing recently, and not a big expert on crypto overall, but there does seem to be some strength recently in cryptos. So one thing I did want to mention is a crypto related stock, which is BTM, which is they apparently do some kind of ATMs for Bitcoin or something. But BTM here reports earnings relatively soon. And so on the 12th, and it's kind of interesting to see this big rally and see how it's been holding. See also how it's been holding the bottom of the Keltner channel. If you look here on the week, on the weekly intervals, you can actually see, I'm not going to go to that weekly, but if you look here, you can see we went under that weekly and we failed to hold it. So this might be actually something that people look for some continuation after basically 2 months of sideways movement in BTM, which is Bitcoin Depot. Just one other that, well, actually, VRT, this is another AI related stock. They make stuff for data centers and cooling. But it's interesting to look at a stock like this kind of, here you have your all-time high back here in January. We rallied, got near it, didn't want to do it, and held. When you don't break out and you kind of go near, it's not a false breakout. And these are often ones that they'll go up, they'll hesitate, and then a month later, they might continue higher. So VRT here might be setting up for a breakout. And the same might be said of Google. Look at Alphabet here. It has a very similar chart where it basically got near the old high, didn't want to go there, just was happy to just sit and wait. But look at how Google had that one dive down on August 1st, and it came right back. This is kind of an abandoned, not quite an abandoned baby, but this is like an interesting sort of thing that shows, what, people are willing to be buyers down here, basically around, under 190, where it went here. So Google might be another one people look to break, to proceed to those new highs. The last thing I want to mention is XLE, the energy ETF, is kind of the opposite, which is kind of clinging on to dear life here, trying to hold on to kind of 84 area. So I think we got to realize is that sometimes people actually like the energy stocks when interest rates are moving higher. One reason is because they trade at single-digit multiples. Their value plays also when people are afraid of inflation and high rates. They like things like oil, and the opposite can be true here. So I think it's interesting here to see this range, but this might look here to actually break down. And we've talked about this potential of this thing going back under 80. So downside in energy might still be kind of coming. And so want to just kind of mention that here. This is a maybe on a potential watch of breaking potential support around 84.5 on the XLE. Okay, that's all I want to talk about today. Remember, we have CPI on Tuesday, August 12th. We will be back on Monday, August 11th with State of the Market. Hope everyone has a great weekend, and we'll see you then. Thank you.